Hey, what's going on, everybody? Physio Trader here. So today we're going to talk about how to open up a retirement account specifically with Charles Schwab. The only reason I'm recommending them is because that is who I use. I've been using them for a multitude of services, whether it's a banking account, brokerage account, joint brokerage account, retirement accounts, a slew of those. I've been using them for around 13, 14 years now. I've had nothing but really positive things to say about them, and so that's who I recommend. It's certainly not the only one out there, but in this video I'm going to go through how to open up an account. This video is going to be specifically geared towards small business owners or individuals who are maybe just starting a business, or maybe you already have an established business but you don't really have much focus on the retirement side because you've been so focused on just increasing revenue and asset and acquisition buildups from there. So let's take a look. All right, so over here we are on just Google, and so what we're going to do is we're going to go to Schwab.com. But in case you don't know that, we just typed in Google Schwab, so I'm just going to go there, and basically right here there's a couple things you can do. They've got these ribbons at the top, and so we're just going to go to Accounts and Products, and you can click Accounts here. Or we're going to click open an account. And then so from here, it's going to give you a couple options. So it's going to say, in this tab, you're going to see the brokerage, retirement, which is going to come up with a Roth IRA traditional or a rollover, and that's not exactly what we're looking for. We're looking for a little bit more in depth. So down here at the bottom left, we're going to click all accounts, and this is going to show you all of the different type of accounts that they offer, and these nice little clickable loadouts, which will give you more options. You basically just scroll down, and as you can see, there are tons of them. But in our case, we are going to do is we are going to click small business retirement. So over here in small business retirement, it popped up, and you're going to see individual 401k plan, which is also sometimes referred to as a solo K. The SEP, which is for Simplified Employee Pension Plan, a simple IRA. Now this one is particularly easy to use, which is why they call it a simple. The personal defined benefit plan, a business 401k, and then a company retirement account. So we're just going to go backwards on this. A company retirement account, which is probably and not going to be applicable to most people watching this video, because if you were at the point where you were looking at an employee or a company retirement account, you're probably a very large business at that point, and you are having your CPA or the bean counters basically kind of managing things from there. The business 401k and the individual 401k or the solo K plan are basically identical in what you can contribute and what benefits you have to you, although there are a small couple caveats to the two. The individual 401k plan is for owner-only businesses with no employees. Now, this does not pertain to a spouse. Now, if you are, or children, so if let's say I own a business, my wife works in the business with me, even if, well, actually, whether she works in the business or not, she can actually obtain money from that. So that's actually a big added benefit for small businesses. Definitely want to take advantage of all of these tax, they're not loopholes, all of these tax advantages in the tax code. And so, and actually, whether you are a solo K or a full business 401k with multiple employees, then you are going to be able to have access to the exact same benefits. The only difference is traditionally with an individual or a solo K with Schwab, if you have less than $250,000 in assets under that account, then excuse me, you will not be able to withdraw that money for things like a house purchase or so until you get over that threshold. Whereas with the business 401k, it's a much larger account traditionally. You're typically going to be added to a different set of rules that you can actually withdraw some of those funds to help finance maybe a real estate deal or anything along that, or maybe like a massive medical expense. And the reason for that is because with Schwab, be very upfront. With Schwab, they have what is called a TPA, or a third-party administrator, that manages their 401k plans that are under $250,000 and under that management. So if you are under that threshold, then you are just going to be under a different, umbrella of advisors. Um, and then with the other one, with the business 401k plan, typically if you're going to have multiple business, and multiple employees, and let's say that they're putting in the 20, 30, $40,000 a year into these accounts, well, the employees are going to put a maximum of 27,000 if they're under 55, and the year of 2023. But if you have 10, 20 employees, that's going to obviously that the net asset value under management in that entire corporate business structure 401k account is going to grow and boom very quickly. The simplified employee pension plan. This is for owner-only businesses with just a few employees. There's a little bit of tax administrative filing fees and etc. Now I do want to preface and say the individual 401k plan, it's free. There are no fees. Or the solo K, the exact same thing, no fees. SEP, no fees. Simple IRA, no fees. The business 401k plan will start to incur fees based on the number of employees you have. I think if you have like less than 5 employees, you can still benefit from that. From the business 401k plan without a fee, and I think the fee structure is really based on just really how big you are, how much administrative work they're doing, because at the end of the year there are tax purposes, there are tax filings that need to be done. Now I have an individual solo K with Schwab. I previously had a simple IRA for several years. The problem with the simple IRA is once you open it, and you give anybody money, you have to match everybody to the exact same amount, which is great. It's fair, it's equitable, so on and so forth. However, once you open that account, you cannot change that account type, change anything for 2 years from the date that you first funded. And so what happened is we opened up the simple, and about a year in, we wanted to transition to the 401k because we were growing, we had a little bit more to do, and we were not able to do so legally. This is not a Schwab rule, this is the FINRA's, we were not legally allowed to do so, FINRA as well as the IRS. And so we waited our 2 years, we opened up a 401k, then we journaled with an ACAT transfer. We took our money from one to the other. That way you have to do what's called an ACAT transfer, ACAT. They'll know all about it, doesn't matter. Basically that way they can transfer money from one account to the next without incurring any sort of taxable event. That way your taxes are all settled in fairness, and there's no change. And so you're not going to end up paying taxes on something as such. So again, whether you're going to do an individual 401k or a SEP, I really don't recommend it, just personally, and again, it's beyond the level of this video. The simple IRA, I would say, is if you are a business owner, go ahead and just do the individual 401k plan because there is no fee. When I first opened the simple, that was because there was fees for the 401k. And it's just a matter of does the fees offset the benefits you get from the program? Since there is 0 fees for the plan, it's silly not to take advantage of it because Schwab is going to furnish all of those documents for you, and again, free of charge. So you get all of the tax advantages, all of the benefits, but none of the fee structures. Now, if you are a business 401k plan with any level of employees that are outside of family lineage, such as children or spouses, then you will have to go to this one, and then typically at that point they're going to want you to call them and talk to them just about how much you're going to have into the program, and then the fee structures are typically going to start at 0, and then they'll grow a little bit higher based on the number of employees you have. So if you have, I think, again, 10 employees, I don't think there's a fee with it. I think the threshold is 20, but don't quote me on that. If you have higher than that, 500, think of like Apple, these big companies, they have massive they have a lot of paper and workload on that, then it's going to be higher. But so let's just go ahead, we're going to click it. And so again, the first thing that you do is when you do click that button is it does show you a little bit. So if you're self-employed or run an owner-only business, you can make substantial contributions towards your retirement with an individual 401k plan. Also, these are called solo Ks. Sometimes a lot of your tax accountants will refer to this as a solo K. What are the fees? Monthly service fees, $0, open $0, maintain $0 for online equity trades, ETFs, or index trades. So this is good. So you're not going to pay a fee to trade. The one thing I really like about Schwab versus when I had employee retirements with, say, Fidelity or ADP is when you get they give you a basket of stocks of like, not even stocks, they give you funds and ETFs that are, you get like 20 choices, and it's like, here you go. When you do this with Schwab, you can pick anything. You can pick any of those funds that they give you. You can do any Schwab, or you can do any ETF, exchange traded fund. You can do any mutual fund. You can do any index fund. You can do any index. You can do any stock. If you want to take all of your retirement money and put all of it into Apple, which I would not advise. And I would not advise putting all of it into any one ticker, because then you're putting all of your faith into that company. But if you want to do that, then you can do that. Whereas with some of these other accounts, you are not able to do that. So when you go to open these accounts, again, it's just going to go through it. It's going to go through the related questions. One of the things that's extremely important, and I'm going to make a separate video, is how is this account funded? And the one thing is important to know is that this plan can be funded with, because you're the owner, as a owner distribution or a deferral, which would be a employer deferral, or an employee deferral if you are taking any sort of income as an employee of the very own business. So the benefit is you actually get to provide a contribution on two different sides, even though it's for the same person. So let's say that I own business A. As the owner of that business, I can put 25%, I can match 25% of employees' contributions to that. But as the employee, I can put 100% of my my salary into the 401k. That way I leave my tax liability legally at zero, up to the legal standard limit of the 401k limits for the year, which I think this year is $27,000. And so you get to put $27,000 away as an employee, up to, you don't have to hit the whole match, of course, but up to $27,000 with as an employee, and then your employer can match you 25% of that. So so your employer can put 25% of that, and not just 25% of the 27,000. If you make $100,000 a year, your employer can give you $25,000 to put in your 401k legally. And so if you're generating $100,000 a year, $150,000 a year as an employee of your very own business, then you are going to be able to put away close to $40,000-$50,000 legally away per year. So this is how business owners get to make more money. They get to tuck more money away legally because they get to do it from both ends. And so when it comes down to let's see. I don't remember. I thought there was a page that you could open the account. Oh, maybe not. You used to be able to do it online. Sorry, it's been a long time since I've done this. So bear with me here. I think there used to be a button. Oh, you know what? I know exactly why. So the reason I cannot do it is because you can see up here as I am not logged into my account already. So if you already do have an account with them, then you can just create one online. If you do not, then you'll have to establish. They don't know who you are. So you're gonna have to establish who it is. So you'll just click all of these down here. The adoption agreement, which is basically telling them what you want to do, the basic plan document, which governs your accounts, governs your records. It's going to go to your articles of incorporation. You're going to complete your account application, basically telling them who you are. You need to have a copy of your EIN, your business tax ID, etc. And then from there, it'll talk about it. So, and then after that, you're going to go to how to furnish those funds. Again, you do not need to furnish those funds on a weekly, daily, monthly, or even an annual basis. If you put money in there, you had a good quarter or a good year, and you're like, you know what, we have room, let's put it in the account, then you can do that. If you have a bad quarter or a bad year, then you don't have to do anything. You just let it sit there and grow, and you just work on your business and keep doing business related things. But the way you contribute, in my opinion, it's quite easy. So you can do a couple things. You can truly just mail a check in to the addresses over here, which again, they'll give you more information if you do open that account. There's just a couple ones. You could be the Orlando, Florida, or the Texas, or I think there's actually a New Mexico or a Nevada one as well. But this is their major hub, so this is where we used to always send our checks. And again, since I would normally do is I would just wait till the end of the year, basically trying to clear out the account, and then I would just send one check at the end of the year and say, this is how much I want earmarked for employer distribution, and this is how much I want earmarked for employee contribution. So, and you're going to do that. You can either, open up a Word document and type, Dear Schwab, this is what I want. Here's my name, blah, blah, blah. This is how much I want to be gone to this account. Put the account number in, sign it. send it in, you can either send it in electronically. Again, I'm not logged in, so I can't show you that right now. Or you can do this transmittal form, which I use, and it's, in my opinion, quite easy. So let's make this a little bit bigger. And so this is straight from Schwab, which I like because it's a nice little PDF fill out. So what I did was I filled this out on a PDF, I saved it, and then I just send it in like once. I think I normally send it in once a quarter, every 2 quarters or so. Again, it just depends. Normally our business is pretty streamlined at this point. There are ways to fund it electronically. I'll be honest, I did it once, and it was actually more of a headache than it was to just write a check and send it in. So I know some individuals are not a big fan of writing a check. Trust me, I get it. I'm really not either. But when I wrote a check, it was basically seamless. The time it took me to write a check, put a stamp on it, and send it in the mail, it was done. Whereas when I put it in electronically, I had to journal it to a brokerage fund. I had to call them. I had to tell them I wanted them to journal it to this fund earmarked for X, Y, and Z. They had to call me back to confirm before it could be done. It just became, one step became 5, and it really just was not worth the time it took. Whereas this, I did it once, I set it up, I have this exact transmittal form already saved, and then I just send it, I print one out and I send it with a check with these numbers that are matched. So put your employer information name, Business A Incorporated, employer identification number 1 2 3 4 5 6 7 8, and then street address. What is it? 100 Cupertino Way. I have no idea. So type it in. Doesn't matter. And then you're basically just going to earmark what type of account do you have. So in this case, it's going to be a 401k. So we are going to choose the 401k, and then from here, so this is important, is you're going to put what plan year, because you can actually contribute into a future or a previous plan year within reason. Again, beyond the scope of this conversation in this video, so we're going to skip it. But we're going to say 2022 is almost over, 2023. You can actually contribute to 23 in the year of 22, especially if you have a really good quarter and you want to get some money off your books. And the recession coming, we don't think we're going to have a very good quarter. You want to lower your tax liability, get that money off your books now. So it's definitely something legal, take advantage of it. So example of the employee name, employee account number, this is going to again be furnished by them, and you're just going to, for me, I looked it up, I put it in once, put in their social security number, 1 2 3 4 5 6 7 8 9, and then this is really it, and this is what I like about it, is so here, and what I did is I just put in all the employees you have. In my case, it's me, my spouse, so they're not employees. Well, they are technically, but they don't have to be. And then here, you're just going to put in what is your elective deferral contribution as the employee. So let's say I have a total of $10,000 that I want to put away in the retirement account. I want $2,000 of which to come from my salary, and the company is going to match me. Let's do it backwards. So I want $8,000 to come from me, and the company is going to match me $2,000. And so from there, I'm saying that I'm going to give them a total of $10,000. Now, I don't know why, but traditionally, this will automatically update to 10,000. So it literally just does the math for you on each line item. And then, again, it could just be because I'm not logged in. And then, so my 8,000 as an employee, as a W-2, the employer, the W-9, is going to send over, this is going to update to 10,000, and then it's going to take all of that and do the total contribution at the very bottom if you have multiple employees, and then basically you sign here, print name, and then put the date, lickety split, I fax it off. And so what I do a lot of times, what I've done is to make it faster for me, is I filled everything out minus, I filled everything out and minus this, and I save it on my hard drive, and then basically every quarter or so I just have quarter transmittal form, and then I either type it in or just physically handwrite it, fold it up, put the check in the middle, and send it off in the mail. So it is a little bit of a process, but to me that is just the fastest and easiest and least resistance path of least resistance for me to get it done. So hopefully that could help anybody. And again, you're just going to mail it to, here are the places you can mail. So again, they're just listed here. If you want to send it to Orlando or El Paso, based on where I'm located in California, I send it to El Paso. If you're on the West Coast or the East Coast, maybe Orlando's faster for you. So, and they'll mention that too. So, but if you have any questions, hopefully this is beneficial to someone. If you have any questions, let me know, reach out, and I'll catch you on the next one.